The next one is to talk about a little bit of the demand for Bitcoin. Like, a lot of talk is that, this cycle is different in terms of there are other players, right? There are ETFs that we didn't have. There is also MicroStrategy, which is buying a lot. And so, yeah, I'm curious to get your thoughts on that, because what we show here is that, between ETFs and MicroStrategy, they are, buying more than basically this other metric that we call the apparent demand growth. So they're growing a lot, and that's something that we didn't have in the previous cycle. And so the idea would be that maybe this bear market is, let's say, smaller because we have a source of demand that we didn't have in the previous one.
Yeah, I'm sympathetic to that theory as well. And it's because like the ETF buyers are being driven primarily through private wealth channels, and private wealth channels invest differently to, Bitcoin plebs and the degens that have dominated like the asset class for the first decade. They tend to buy dips, right? And they also rebalance more often. So they may have a structured portfolio or a portfolio allocation framework, which has Bitcoin sitting at sort of 2%, 3%, whatever the case may be. And when that underweights or when that drops below the benchmark weighting, then they'll add, and when it outperforms, they'll trim. And that could be a big change in the market structure going forward for Bitcoin in terms of potential returns, but also in terms of the volatility.